Right now, though, let's dive into the trends of the market. Jeffrey Degraaf is truly exquisite at looking at charts, what they do say, and also what the charts don't say, of course, with Renaissance Macro. What do the charts not say right now?
In the market overall?
Market overall.
The charts say do not be an intermediate term bear. Do not be short this market. If we look at the performance of breakouts, without question, this is a market that does have some momentum and is good. The other part of that would be very careful on the reversion trade. You know, we've had this big reversion, and if you look at the momentum versus anti-momentum trade over the last quarter, we've stretched this into the 95th percentile. In other words, momentum.
Translate that. We've way extended into what?
You've extended into a realm where the performance of laggards doing well has not consistently persisted. And so, in other words, it's a point where
the leaders are leading.
The leaders are lagging, and so it's the point where that should start to reverse, actually.
Okay, what does that mean for the consumer discretionaries, the Colgates of the world, the McDonald's of the world? They're way out extended, aren't they?
They're extended, but they've actually come in a little bit on a relative basis over the last, call it, 2 months. And so this consolidation that we've seen looks pretty interesting to us. Philip Morris, McDonald's.
Yeah.
Those names look like they're good, solid trends. Their relative performance has softened a little bit, but again, those were leadership names in the February lows, and they've come back.
How do you interpret Apple Computer? I mean, we had the chart up earlier an hour ago with Michael Holland. We're making jokes about when Holland sold, and of course he's been a uber bear on Apple. Technically, what do you do within the silliness of the day-to-day emotion of the media on Apple?
You have to follow trend. I mean, it's that simple. You use some trend discipline, and I don't care if that's a 65-day high, if it's a 50-day above the 200-day moving average. Follow some trend discipline, and that's going to keep you on the right side of Apple for the entire next decade.
Ivani, that one moment there with Jeff Degraaf was worth watching Surveillance all week. That is the quickest way not to lose money is just what Mr. Degraaf said.
Well, and I know that, the macroeconomic, fundamentals are not what you look at, but what about something like Brexit or a Fed rate hike? I mean, surely they could disrupt trends?
Well, they can, but I think when you're, I worry more about the unforeseen, the 9/11s, right? I mean, when we talk about Brexit, it's all slowly but surely getting built into the system in one way or another. It's being handicapped. Now, that's not to say that the market's going to get it completely right, but it's not going to be caught totally off guard. The chances are that it's not going to be caught totally off guard when something like that takes place, because there is a transition. As Carl was saying, from one equilibrium to the other. That's
so you walk in the office of high-frequency economics. You've got to brief one of the great international economists of the world. What's the one chart you want to show Carl Weinberg right now?
The one chart I want to show Carl Weinberg.
Dollar, gold?
I would say gold.
Gold.
Yeah.
Tell me about gold.
Well, gold's trend and momentum changed for the first time in 4 years in January. And it really was one of those sort of standout moments for us. We go through hundreds of charts on a weekend, and it was one of those standout moments for us that just said, something is different here than what we've seen.
Up 1% today, 1303.10 now, keeps rising.
And look at silver, right? And then, compare that to the industrial metals. Gold versus the industrial metals has absolutely trounced that relationship, which is, historically, that's not great news for the economy. It just says that there's some disruption that's taking place globally.
Carl?
What do you think about the Nikkei?
Well, I think the Nikkei is a yen story, and so the yen strength is just absolutely anathema for the Nikkei in our view.